Ladies and gentlemen, welcome back to another exciting week in the crypto markets. This is your crypto market update for Monday, July 1st, 2024. We saw some amazing activity come in on Bitcoin overnight as we broke above that critical 61,300 mark that I talked about in Friday's update. I spoke about how that was an important level to break and that once we broke that level, we could see some significant bullish upside. Of course, that is exactly what happened. Once we broke that level, price just started to fly with a strong hourly candle coming in on insane volume. There was about 4 to 6 hours of consolidation following that, depending on your exchange, and then price bloop, 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 up to where we're currently at right now. I want to say that often when I'm working with new students or newer traders, they have a problem with zooming out and focusing on the bigger picture of what's really going on with price, and that is so critical as a trader. It's easy to get bogged down in the 1 hour or the 15-minute, sometimes even the daily, that you lose track of the bigger picture of the bigger trend. And so in today's episode, we are going to focus on the weekly timeframes and get that bigger picture view of what's going on with our cryptocurrency markets. Let's get cracking. So often when I am analyzing the markets, it is really good for me to just take a step back and regularly review the higher timeframes. And for me, I love to go to the weekly timeframe to really get that fundamental picture of what's going on. I promise you, if you stick to the fundamentals of trading, stop trying to chase all this fancy stuff, stop trying to chase all these meme coin pumps, stick to the fundamentals of trading, focus on quality trades over quantity, and you can achieve long-term success in these markets. On the weekly time frame for Bitcoin, we can see some important things. One, we are currently consolidating and testing support in the form of the weekly 21 exponential moving average. This is one of the most important moving averages on the weekly time frame. Now, if we look closely at last week's closure, we can see that we closed a weekly hammer candle at support. This is generally a strong reversal candlestick. Now, if we can close this current week bullish, and even more importantly, if we can close a bullish engulfing candle, particularly above 64,000, then we will have formed a morning star pattern, which is an even stronger bullish reversal signal that I often watch for on these higher timeframes. The reason closing above 64,000 is so important is because that is the shelf of our current high volume node that we're consolidating in. As we can see, last week's price action drove the wick into the low volume node territory underneath our shelf here, where liquidations and large limit orders often sit. Price does not like to remain in low volume nodes for long, and it often violently crashes through them or violently reverses from them back into high volume node territory, where price is more agreeable to both buyers and sellers. Note too, that the wick that we formed last week gave us a higher low within this consolidation range that we're in. We now have 2 lower highs and 1 higher low. This allows us to begin to sketch the pattern that price is taking, and it's taking the form of a symmetrical triangle. Now, this is a continuation chart pattern, and since we are in an overall bullish trend, we would expect the resulting breakout to be to the upside, which would forecast a continuation of the bull market and the fact that this market cycle is not over yet. Now, let's turn our technical analysis to Bitcoin futures, where we can see the declining power of the sellers as evidenced by the volume delta indicator. Now, as we can see, their selling power has steadily diminished as we have approached the lows over the last 3 weeks. And this week should either showcase the last gasp of the sellers, as we saw the last time we formed a weekly hammer candle, the last gasp of the sellers before a strong reversal, or the strong return of the buyers with a bullish engulfing candle. As I expected, the bearish cross under from time transformation did herald another week of downside. And if we pay close attention to the last Bitcoin dip and bounce structure, even after the previous hammer candle, we still continued to close yet another bearish week. The critical thing to watch for is how this weekly candle closes and any subsequent weekly closes. If we are indeed forming a symmetrical triangle, and we are indeed going to bounce from this low significantly, maintaining a closing price above last week's low of 58,218 is absolutely critical. Closing below last week's low would not only invalidate this symmetrical triangle structure, but would also be a breakdown of our current consolidation range. It would turn the bearish cross under from both time transformation and the decision point momentum oscillator into not consolidation signals, but bearish reversal signals, heralding a move lower to 50,000 or 55,000. However, as long as last week's low is respected, I would expect prices over the next 2 to 3 weeks to rise to the midpoint of the range, 64,500, which we've already done a good job at getting close to, or even more optimistically towards the top of the range, around $70,000 to $71,000. Now, to add even more strength to this bullish narrative, we will once again turn to analyzing Bitcoin mining activity. While miners are still in capitulation, as we can see, largely due to the popularity of ordinals and runes, which are boosting demand for block space and supplementing miner revenue with transaction fees, Bitcoin has now tested and bounced from the production cost, a level which we have never successfully closed below. It remains my base case that we will see a violent reaction away from this level, and that should we actually end up closing below it, well, that would be unprecedented in Bitcoin's history, and in combination with my analysis on the cost basis of short-term holders and long-term holder distribution patterns, would absolutely lead to a much longer and deeper correction. As we can see from the liquidation heat map, the market makers have been busy bees over the last 24 hours, and short sellers are the ones who have been targeted, which is a nice reprieve from the constant abuse that leveraged longs have been suffering over the month of June. As we can see, liquidations really began once price started driving up above 63,300. And as we can see, price has pretty much swept the majority of the short liquidations. However, as we can see, there is still a large cluster centered around $64,000. And what we've noticed time and time again is that price does not make a decisive movement in the other direction until we clear short liquidations. So it's just Monday, but we do have the 4th of July holiday coming up. So even though we've made some good progress so far, I would temper my expectations. I'm not sure if we're going to see that much in advance this week. In other words, I'm not expecting us to make that much progress over the course of this week. Most of it likely has already been done. So I think we'll probably clear these short liquidations before a pullback. So there are still likely opportunities to position for that larger movement up to 70,000. Now, moving to the footprint chart, you guys can see these are the levels that I said were critical for Bitcoin to close above, and absolutely we did. This is where I recommended longing. So, I mean, I don't know why you're not subscribed yet. But as we can see, a large number of large limit asks have been filled on this rally to the upside. And notice the dynamic here. Typically, once these levels get filled, price does begin to move away, and it's usually not until a large cluster of these get filled that we can actually get a decisive pullback or movement in the opposite direction. That's because the traders who set those limit orders are smart traders, and other traders and market makers pay attention to their levels and tend to respect them. Also notice that one large limit order does not end a trend. They are a foreshadowing of what comes more slowly in the markets. Unfortunately, most retail traders are very short-sighted and do not have patience, and they get tossed around by their own whims of instant gratification. So learn patience. Let the market come to you, as professionals do. There is another significant cluster of limit asks at 64,000, which aligns with that large liquidation cluster I pointed out earlier. So if anyone were wanting to fade this rally, I would likely recommend positioning there. Even though I believe the dominant direction this month will be to the upside, that doesn't mean that you can't capitalize on movements that last a few hours or days. Finally, the footprint chart does give us the best clarity we can as far as where individuals are positioned and what has happened. We are coming up to that critical juncture for Bitcoin as we have swept all the aggressive ask imbalances up to this level, and really only this level at 64,000 remains. It stretches up to about 64,130. We tried to tap into this cluster and clear it earlier, but we've had a little bit of a pullback where we've seen some aggressive sells come in. But I think that we will likely take this out before any more significant movement down here to test 61,000 if that is going to happen. That makes these three factors align. We've got liquidation levels, large limit asks, and ask imbalances clustered around that zone as being very important for Bitcoin. It is the last close to us technical level where we should see sellers step in with some force and attempt to suppress price. This is an opportunity to fill more long limits on dips, as longs will likely become the target for liquidation sweeps over the next few days, and we have a big liquidation cluster down here at 62,400. We can also identify from this chart the importance of volume. I talked about last week on Friday, you can go watch the video, how important it was to close above 61,300. And look at the candle that closed above 61,300. This massive green bullish candle, bullish engulfing candle with a huge, massive volume signature. These are the kind of very clear technical signals that you want to watch for in your own trading. Strong volume, strong candlestick patterns, strong technical signals that should lead you to taking strong technical trades. You want to trade when the odds are in your favor. And what happened after this? A little bit of consolidation and then bloop, 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 bloop. Up we go. Okay? High volume can result in a reversal. But when it's followed by a tight period of consolidation and continuation, you should definitely be on the momentum train to the upside. So identifying critical levels that need to be broken and then watching for those levels to be broken with conviction, which is a large candlestick with big volume, that are your signs to take trades in that direction. So if sellers do step in with force at 64,000 after we sweep this liquidity, my first target would be 62,420 approximately, to sweep the aggressive bid imbalances there and to clear long liquidations. Unfortunately, I need to keep today's crypto market update fairly short and sweet. I have a lot of work to do for the Crypto Trading Academy members. They did receive my exclusive altcoin analysis and where I'm thinking about positioning for altcoins moving forward this month, and there's still a lot of work left to do. We will be launching the Academy officially next week. We have pushed it back to give us a little bit more time to prepare for the individuals that have showed so much interest. So this is your last chance to get on the wait list for the Academy. The link is in the description. Also, we launched part 2 of our new series, Technical Analysis for Crypto Traders, how to read a candlestick chart over the weekend. So make sure to go check that out if you want to continue to improve your technical analysis skills. Part 3 should be coming out this week as well, which will be a deep dive into understanding support and resistance zones and how we use them in our own trading in the Academy. Until tomorrow, trade safely, and I'll see you in the next one.